The Australian Financial Review.
Hello, I'm James Thomson, Senior Chanticleer columnist at the AFR. Welcome to our weekly news breakdown of all things business, finance and markets. With me today is not my Chanticleer colleague Anthony McDonald, but the Financial Review's new Editor-in-Chief, James Chessell. How are you, James?
Really well, James. Very excited to be on. Long-time listener to the podcast.
Fantastic. Well, this week we ask whether the RBA should be meeting with banks and investors behind closed doors. We examine Virgin Australia's big deal with Qatar Airways and look at what the Middle East conflict means for markets. But first, it's fantastic to welcome James to the podcast, and I'm not just saying that because he's the boss. Listeners will remember, of course, a few weeks ago we farewelled our previous Editor-in-Chief, Michael Stutchbury, and we're thrilled that James could join us with Anthony on a well-deserved break. James, you're coming up to 2 months, I think, in the hot seat, and it's been an incredible period for news. Australian politics is getting a bit testy as we head towards the federal election. Trump and Harris are locked in a very close presidential race. And of course, the conflict in the Middle East has gone to a new level this week. We might start there if we can. I guess fears of a full-scale regional conflict in the Middle East are rising and they're very real. It's even become an issue in Australian politics. But markets are largely unmoved. Oil's jumped around a bit, but global share markets are really looking past this. Has that surprised you at all?
It's a really good question, James. I think the geopolitical environment right now is very, very fraught, to say the least. And notwithstanding the optimism that has permeated markets in recent weeks, and we'll get into that in more detail in a minute, I would have expected a little bit more nervousness about how this may play out. And it obviously says two things, I think, about what's going on. Many investors are expecting some kind of resolution in the Middle East that doesn't involve a worst-case scenario. And it's probably worth mentioning that that would differ with some in the geopolitical world that we talk to every day at the Australian Financial Review.
Yeah.
And the second thing is that it says a lot about the inbuilt optimism in global markets at the moment and the focus on China.
Yeah, I think it also says that perhaps some parts of the global economy are going the other way. Like, If you think about the oil price, it's supposed to be the main transmission mechanism when we have conflict in the Middle East. You know, oil goes up, and we've seen a bit of that this week, but oil's at sort of 75 US a barrel, right? It was at 90 back in May, and we've had in the last few days the Saudi energy minister come out and say oil's actually more likely to go to $50 a barrel than $100 a barrel because the demand's not there. So that's the other thing, I think. You've got this underlying demand picture. Demand's not really strong in Europe. It's not really strong in China. And on top of that, none of this conflict has really affected the supply of oil. So you've still got strong supply. I mean, I didn't realise this till this week, James, but Iran's oil supply is at a 6-year high. So even with all this stuff going on, they're still managing to get plenty of barrels out into the world. So it just shows you that our perceptions of what goes wrong in a conflict like this sometimes doesn't match reality.
Yeah, you're right, James. And you mentioned China briefly in there, in amongst some really pertinent points about the oil market. But if you're sitting here in Australia, I think the conversation has still been focused to a large extent on China. And speaking of that, you wrote a column at the start of this week, which I thought was really interesting, about the return of the everything bubble. So before these missile strikes and all the understandable nervousness about what's going on in the Middle East, we had China share market enjoying its best day in years. We had good news in Australia, where we hit another record, and US inflation was pretty rosy as well. But on the other hand, I was really interested in a rather downbeat assessment from Chris McQuay, who's a bit of a legend in Australian funds management. Once was famously likened to Warren Buffett by Matthew Grounds. You spoke to him, and in the interest of sort of giving our listeners a full picture about what's going on, tell us what he was thinking.
Well, look, he was quite downbeat in many ways. He was saying, I don't expect investment returns. I think they'll be lower over the next little while. He had a lot to say about how the market's really been run on short-termism, on noise, on momentum, on meme stocks. He had a whole list of things. Private credit, people getting into things that are liquid in the idea that there's some sort of premium attached to that. Chris thinks all that will evaporate. Governments are spending too much money. They'll keep inflation and interest rates high, and eventually this will tell on investment returns, which he reckons are going to be lower going forward. Now, I think it's a really interesting sort of way of viewing the world. The one problem, I think, James, is share markets just keep going up. They keep grinding out these all-time highs. We had a couple on the ASX this week. There's been 40 all-time highs this year on the S&P 500. So I consider myself to be a bit naturally bearish, but I guess the bears are just not reading the situation right at the moment, are they?
No, they definitely are not. I'm naturally bearish myself, James, so I'm glad I'm not in the funds management industry. I would not have posted spectacular returns. But we've seen a little bit of a switch away, I guess, in focus from some of the bank stocks, CBA in particular, that have almost sometimes defied rational explanation in terms of their performance. And then you've seen a bit of a movement towards the resources stocks. Now, whether this is money in search of a story or story in search of money, it's hard to know. But there is, as I said before, a lot of optimism there. I think Chris raises some pretty interesting points. I think the fundamentals are tricky. I think there's some stuff to worry about in China as well.
Yep.
You've seen some interesting movements in iron ore prices, which are a big determinant for Rio and BHP's market performance as well. And yet, here we are, another record, another record, another record.
Yeah. It's interesting. I mean, how well did China time their big stimulus announcement? That they basically got all this good news out there, and now they're on 7 days holiday for Golden Week.
Yep.
And so the market's sitting on a 28% gain over a couple of days or something crazy like that. And everyone gets to go away on holidays, feel good about themselves, and spend lots of money, hopefully. So full marks to the Chinese government. You can't get everything right, but sometimes your timing can be spot on.
Yep, well played. And they get to consider the geopolitical ramifications in a relatively calm way as well, which always helps.
Absolutely. Okay, James, let's move to our first big topic of the week. And on Tuesday morning, the worst kept secret in Australian aviation was finally made official when Virgin Australia announced that Qatar Airways would buy a 25% stake in the Australian airline. Now, we don't know what Qatar paid, but this is pretty good news for Virgin, which infamously collapsed into administration in 2020 and was ultimately rescued by a US private equity firm called Bain Capital. Virgin and Qatar will team up to help Virgin get back into the international travel game from next year. Virgin customers will be able to fly from Brisbane, Melbourne, Sydney and Perth to Doha and then on to Europe, which should help bring ticket prices down. But James, the Virgin boss Jane Herdlicker was most excited about the potential for this deal to improve Virgin's competitiveness against Qantas in the domestic market. How does this mainly international deal strengthen Virgin's hand at home?
Jane Herdlicker is saying to people that this is a moment in time for Australian aviation, and I think in this case the hyperbole is probably real. If we just take a step back before I answer your question, James, just remember that in the first half of last year, Qatar wanted the rights to land a lot more planes, close to 30 planes in Australia, and was thwarted by the Albanese government despite the Transport Department thinking it was a good idea. That was probably a low point for Qatar and also for Virgin. Fast forward to now, they're back at the table. They have a stake in Virgin. They're able to land planes in Australia at a much greater volume. And I think that's due to three main factors in Australia. The first is that we've had the collapse of a couple of airlines, Rex and Bonza, and that's probably focused everybody's thinking. The second is competition is a big national conversation these days, sometimes not particularly intelligent conversation, but it's certainly front of mind for people. And I think the government's very aware that they've been very critical about supermarkets, for example. They've been open to having an inquiry about pricing. The ACCC's obviously launched an investigation into Woolworths and Coles as well. The coalition's jumped on the bandwagon and they're focused on the big box retailers such as Bunnings. And so therefore the Albanese government won't want to get wedged on competition or give the voters any reason to believe that they're anti-competitive.
Yep.
And I think the third thing is the public mood has probably moved against Qantas a little bit over that period of time I talked about. You've had the controversy over Alan Joyce and his pay. You've had the controversy over the governance report in relation to Qantas. You've had the ACCC decision, and we're waiting on a TWU decision about all those workers that were sacked during the pandemic. So it's been a pretty bad time for Qantas, to say the least. You'd have to have been living under a rock not to know that. So Virgin does the deal. They have a deep-pocketed partner now in Qatar. Qatar has relationships, equity relationships, in fact, with some of the world's biggest airlines, including BA.
Yep.
And they've wanted to have a proper foothold in Australia for a very long time. And Qantas and its relationship with Emirates has mostly thwarted them. So I think having a deep-pocketed partner that will improve the product, that will allow them to invest in lounges and planes and take on Qantas, I think is an unequivocally good thing for Virgin. But more importantly, it's a good thing for Australian consumers. The only thing I'd add to that, James, is don't expect a return to the John Borghetti years when Virgin tried to take on Qantas at the top end of the market. I think they'll stay firmly and deliberately in the middle market under Jane. She's pretty clear on that one.
Yes.
And I think that's really important. They're now making profits for the first time in a long time, and they don't want to put that at risk.
Yeah, I've got the sense that the scars of the process of going into administration are still very raw, and they're not going to launch a capacity war or a discount war to try and hurt Qantas. It'll still be pretty slow and steady.
Yeah, I agree with that, James. I touched on Qantas before, but we should probably go into that a little bit more detail. They're predictably unhappy about this deal. They're not saying a lot publicly for some of the optics reasons I mentioned before. Their voice is probably not as strong in these debates as it once was. But is it worth going into some of the specific concerns they might have?
I mean, the specific concern they've got is around these delightfully named things called wet leases, which is a great bit of aviation jargon. But a wet lease is basically
creepy.
It's like very creepy. A wet lease is when you basically use someone else's plane and cabin crew, and your name's on the ticket. So yes, if you buy a Virgin flight next year to, I don't know, Rome via Doha, it'll have Virgin's name on the ticket, but it'll be a Qatar Airways plane and Qatar Airways crew. That's pretty common in the aviation sector. Everyone uses wet leases to some extent, including Qantas, who's had a wet lease with Finnair in the last couple of years as they've sort of come out of COVID and needed to get some capacity. The problem that Qantas sees with these wet leases is that it argues that it will have to pay cabin crew as much as 3 times more than what the Qatari cabin crew are going to be paid. So there is this uneven playing field that's immediately created between Qantas and its biggest competitor. I think there's something to that. It's a reasonable point to raise. The one thing I guess you'd say, though, James, is there's uneven playing fields all through aviation. Because so many airlines are government-owned and they've got deals, whether you're Singapore Airlines or Emirates, as we mentioned before, everyone's got some sort of deal that underpins them and changes their economics. So that is the story of aviation. I guess what Qantas would be worried about is it doesn't have to take on all these other international players in its home market. Virgin is the domestic competitor. So, but you said this deal has sort of got the government in a corner. It's sort of got Qantas in a corner too. It doesn't want to be seen to be, out there going back to the bad old days of lobbying too hard and whacking the competition. So I don't know. How loud do you think Qantas is going to get about this?
Not particularly loud. They've had all these PR issues. The current chairman and CEO are going to put their heads down and try and get the job done much more quietly and in a much different style to Alan Joyce, and I think that's pretty appropriate. The other thing I'd add about wet leases and foreign workers is Qantas has got to be careful itself. You mentioned Finnair. I think that deal does expire relatively soon.
It does.
But Jetstar, which is obviously Qantas's low-cost carrier, also uses foreign crews on occasion. So, the glass houses, stones, etc. So it's a pretty tricky one for Qantas politically, and they've lost a lot of bark, and I think they'll be pretty subdued on that front. As I said before, this moment in time argument is, I think, pretty accurate. For the first time in a long time, we might have some genuine competition in the domestic market in Australia, and that is, as I said before, a good thing for consumers.
Yeah.
This is a big win for Bain Capital as well, isn't it, James? Obviously, they get a big payday from selling the stake to Qatar, but as we've discussed, they now have a much stronger airline that they're still very much invested in. And how do you think this then plays out as we head towards a float, potentially next year or the year after?
Yeah, well, it's hard to say when the timing of the float will be, but this is definitely a win for Bain. If you think about when they rescued Virgin from administration, I think they put something around $750 million into of equity into the business. They already got that back a couple of years ago. They paid a pretty big capital return around that figure. And so now they've sold a stake to Qatar. We don't know how much for, but we presume it wasn't chicken feed.
Yep.
And now I think, that they had a crack at floating the business a couple of years ago. It just fell horribly flat.
It was the wrong time, wasn't it?
A wrong time, but I reckon also it's a different proposition now.
Yep.
Now you're going back and you're saying to the local investors, hey, we've got international flights again. Hey, we've got a cornerstone investor with deep pockets. The risks look different. The risks look probably a bit less risky. And so I think that'll work for them.
I think that's right. You need to remember, or people need to remember, that pre the collapse, which I think was 2020, Virgin had a pretty complicated and cluttered share register with many different airlines on it, and that just created strategic and chaos for the airline. Virgin's been pretty clear that they're not looking for other equity investors ahead of the float, and I think that's pretty sensible. They have a good relationship with the US carrier United, but having one cornerstone shareholder as opposed to a bunch with potentially different views about where it should grow and where it should not grow, I think will make it a much more saleable proposition when it does come time to float.
Yeah, and James, just finally, we should mention Jane Herdlicker's in the final months in the CEO's chair. This is a bit of a parting gift from her to the Bain Capital, I guess. I think there'll be a new CEO announced this side of Christmas. What challenges are they going to face?
Yeah, it's a good point, James. I'm sure she'll get a parting gift from Bain in return for pulling off this deal, by the way. The way private equity deals tend to work, she won't be heading off into the sunset empty-handed. There has been a bit of a victory lap feel to it this week.
Yep.
She's made no secret of the fact that she will now probably focus on her job at the tennis and other things. She's got a family, all of that kind of stuff. The key for the next CEO is pretty obvious. It's execution of this deal. We've just spent a lot of time talking about how potentially positive it is for Virgin and consumers. They've got to actually deliver on that. The second thing is to sell the float. That's a really, really key objective for the new CEO. You've got to remember he's still being employed by Bain. They want to maximise their return on this. So that will be his number one or her number one KPI with a bullet.
Yeah, it'd be fascinating to see whether we get a local or some big aviation person parachuted in from overseas.
Indeed. Let's move on to our second topic of the week. The AFR has broken a series of stories about problems at the Reserve Bank of Australia. In particular, its practice of holding private briefings with banks and investment banks and their clients. Surprise, surprise, it turns out that some of the information discussed at these gatherings leaks. And at times the RBA has been forced to ban these investment banks, and we've reported about RBC and Westpac in the last week, from future briefings. James, let's start at the beginning. And I think this is a really critical question. Why would the RBA do these briefings in the first place?
Well, I think one of the criticisms as a central bank is that you can sort of be sitting in an ivory tower there in Martin Place and you don't listen to anyone and you deliver sermons from the Mount every few weeks, and it's a bit of a command and control relationship. So I think the RBA getting out there in the community is important. I think generally, as a rule, you want the RBA talking to banks, you want the RBA talking to traders, you want the RBA talking to investors from overseas and local investors, and just getting a sense of where they see the economy. I mean, Phil Lowe and Michelle Bullock have talked also about how important it is to go out and engage with community groups. You know, Phil Lowe used to talk a lot about the letters he'd get from people saying how difficult it was as rates rose, and he's made a point of going out there and meeting with some of those groups and taking their temperature. What are they worried about? So I think generally that's sort of a pretty good thing. The problem they've got here is that these meetings, we just sort of don't know a whole lot about them. They do go on behind closed doors. You never see the guest list. Everybody who gets invited sort of feels like they're getting the inside running or something like that. But James, that's the confusing thing to me, because if the RBA doesn't use these meetings to talk about things it hasn't already discussed publicly, why is it so upset about the leaks? I mean, why put Westpac and RBC in the sin bin for a year if the discussions are pretty innocuous?
I too share your confusion, James, to a certain extent. So one of the things we are told when we're reporting these stories and commenting on these stories is we just want you to know that the information that is discussed in these meetings, as you alluded to, James, isn't wildly sensitive. It's a variation on publicly stated themes. We might go into a little bit more detail, but we're also there to get a lot of information from you guys, you know, so we don't live in an ivory tower, as you discussed. And these conversations are much better if they're done confidentially. But then I bump up against the same issue you bump up against, which is if you're leaking information that is, you know, innocuous, why am I then getting a 12-month ban? So Westpac is banned for an entire year. Westpac, one of our big four banks, is banned for an entire year. That sounds like a reasonably serious sanction to me. So there is a bit of a disconnect, I think, potentially between the punishment and the crime. I think the RBA would obviously say there's an important process here, and if the RBA says that a meeting is subject to Chatham House rules or confidentiality, then all the participants must participate in that and agree to it.
Yeah.
But at the same time, I'm not quite sure why such draconian punishments are being imposed if the crime isn't that bad. So it comes back to the point about maybe a little bit more transparency about what is actually going on here would be really helpful to demystify the processes and demystify the punishments that are handed out.
I mean, that's part of the problem here. Until we broke the news this week, a lot of people wouldn't have known that these meetings were even going on. But they're not that secret of it. Don't we just need a calendar or something and that would clear it up? Or some rules? I don't know.
Well, the Prime Minister now effectively makes his diary with a properly elapsed time period public. There's a similar thing in New South Wales with ministers. I'm not sure why you couldn't have a similar system with the RBA. I tend to agree with the RBA. I don't think these conversations are quite as exciting as some people would think. But at the same time, the lack of transparency about them does make them intriguing. But one of the ironies of it is that Michelle Bullock has probably done more to increase RBA transparency in the very commendable press conferences she gives to talk about rates decisions or lack of rates decisions. Yes. And Jim Chalmers deserves some of the credit for that as well. But she's done more to increase sort of transparency and make the RBA sort of publicly accountable in the way that it communicates than anyone. So I think this is something that, as you suggest, could be cleaned up relatively easily.
Yeah. Now, we shouldn't forget, amid all this, the RBA does have an actual job to do, And this week we saw some pretty strong retail sales numbers, which suggests the consumer's holding up okay. I know you're a regular listener to the podcast, James. We love our rate predictions here. Where do you think the RBA's cash rate goes next?
Well, I think it goes down next, James. I think the better question, which is what you were going to ask
when?
As a follow, I'm sure, is when it goes down next, and that's the harder one. The economy is always interesting, but I think it's particularly interesting at the moment. There's a two-speed economy. There are parts of Western Australia, Queensland, and even South Australia that are flying at the moment, and a lot of Victoria and New South Wales is not probably going quite as quickly, and that's a pretty hard thing for any central bank and or government to manage. I think the retail figures probably surprised on the upside. And while the inflation figures the other week were, on a headline basis, promising, underlying inflation is still well above where the RBA wants it. So I don't think any sensible observer is expecting a cut anytime soon. I think they'll hold off on a raise for what it's worth.
Yeah.
And then the really, really interesting question is, do we get one before the next election or do we get one after the next election? And it's going to be really close, I think, on that front, and may even depend on when we have that election, whether it's in April or May.
I'm still February for the first cut. Are you maybe a bit further out than that?
In keeping with my bearish nature, James, yes, I am. Yeah, I'll go after the election just to make things interesting.
Okay, we'll accept that. All right, we'll come back after the break. There's another big week for central banks coming up. Back in a sec. Well, welcome back. If you want to know more about what we're talking about today and a whole lot more, AFR subscribers can sign up to the Chanticleer newsletter at join.afr.com/Chanticleer. Every Saturday morning, the newsletter pulls together the best Chanticleer columns from the week and the best bits of this podcast and delivers them straight to your inbox. Okay, James, it's a bit of a central bank fest this week. On Friday night, we've got US job numbers. Everybody's wondering where the Fed's going to go next. Having cut interest rates by 0.5% a couple of weeks ago, the Fed chairman, Jerome Powell's been out and about this week saying to everyone, steady on, we might not need to keep cutting quite as hard as you all think, but I don't know if that message is really getting through, to be honest. We also, next Thursday night, we get US inflation numbers, so that'll help Jerome Powell. And locally, James, the other big thing is the RBA meeting minutes. So I guess we'll see how close or far away their thinking was last week to a cut. There didn't seem to be too much movement at that station, as you said, though.
Yeah, I don't think so. I think they'll have a pretty good look at how the Christmas period goes. Obviously, keep an eye on those key determinants of underlying inflation and have a proper look at it in the new year. I don't think we'll see anything wildly exciting out of those minutes.
Yeah, you mentioned the RBA, timing its cut around the federal election. That's a question for the Fed too.
It is.
Stepping back, where do you think the US election is sort of at the moment? We had the vice presidential debate this week. There wasn't any talk of dogs or cats being eaten, which was a relief. But do you have a sense of where things are standing at the minute?
Anyone who tells you they know where the US election is how it's going to be decided doesn't know what they're talking about. I think it is very much up in the air. I think there is a lot of quiet support for Trump that isn't getting covered in the understandable excitement among a lot of media outlets about Harris and the momentum she appears to have.
Yeah.
But I was speaking to someone who lives and works over there and is closely connected to the politics, and he was telling me about how in states like Pennsylvania, a lot of people are signing up to the Republican Party, and there's a real groundswell of support there. Now, I'm not suggesting Trump's going to steal it either, but I think it'll probably be closer than most people think. And I think the narrative at the moment that Harris has snatched it back for the Democrats is probably a little early, and we've got a long way to go. So the next few weeks will be absolutely critical in the US, and they're both going to go at it like cats and dogs.
Yeah. Great for selling newspapers too, hey, James. It's going to be so interesting over the next month and a half.
Indeed.
Well, we love our question here at the Chanticleer podcast, and our question today is from Tony from Tunisia. Wow, that's a long way away. If you've got a question you want to send in, you can email us at chanticleer@afr.com. You can also send us a question in audio form. Just record a voice memo on your phone, include your name and where you're from, and email it to us. So Tony asks, "Hi Chooks, Michelle Bullock has suggested people paying mortgages under stress from interest rates need to dip into their savings or work extra hours. Firstly, most families are living week to week and utilising credit cards, etc. in this circumstance and don't have a vat of savings to dip into. Secondly, extra shifts are not available from employers as the economy is not growing. Does the government need to be called out for not reducing inflation rather than the RBA?" Now, James, there's a few issues that Tony stuck together here.
There is a lot.
Where do we start here? I don't think Michelle Bullock, James, is trying to say to people, you know, she's not doing the let them eat cake here, just dip into your savings, what are you whinging about?
No.
She's trying to say we are trying to slow the economy for a reason.
Yeah, and I think her point is that some people are being forced to dip into their savings or borrow to service their debts, and that's undoubtedly true. It all centres around the direction of the economy and whether the government could be doing more to improve it. There is no doubt, I think we can say without any doubt, the economy is struggling. The June quarter national accounts data that was out in September showed that GDP was growing at 0.2%, and it's about the worst measure we've had excluding the pandemic. And I think that gives you a pretty good and unequivocal view of it. It's also worth mentioning, I think you wrote this in one or two of your columns, James, that it's been propped up by immigration.
Yeah.
And then to go back to the question, it's also been propped up by a lot of public spending. And if we go back to poor old Michelle Bullock, one of the things she said a little while ago, quite carefully, as central bankers do, was that government spending was perhaps adding to the inflationary pressures on the economy. Jim Chalmers took exception, not necessarily to Michelle, but to the idea that he was
Yes.
he was responsible. And not long after that, he went on record to say that the RBA's decision to raise rates 13 times was smashing the economy. So there's a lot of different factors at play. There's a lot of blame shifting going on there. But there is no doubt that public spending is really significant at the moment. It's at record levels. And the really key problem, James, is that this public spending is not necessarily improving productivity in Australia. And that's where we've got a real problem. A lot of it's in the care economy, and you know, there are some good reasons to spend money in the care economy, but it's not necessarily productive spending. And a lot of it's also in public sector wages. Once again, there are some really good arguments for that. But is that improving Australian productivity? The answer is probably no.
Yeah, no. It's going to be fascinating to see how both sides of politics approach increased spending coming into the election. Elections are usually a time for more promises, not less. So I wonder what Michelle Bullock thinks about that. We probably will never know. She'll keep that very much under her hat.
I would imagine so.
Well, James, thank you so much for joining us today. It's been great to have you, and we look forward to having you again on the Chanticleer podcast at some stage.
I appreciate it, James. It's been great fun.
Terrific. We'll see you next week. If you like the podcast and you want to hear more, consider sharing or giving the podcast a review, as it helps other listeners find us. And don't forget to follow wherever you get your podcasts. At The Financial Review, we investigate the big stories about markets, business and power. For more, go to afr.com and you can subscribe to The Financial Review, the daily habit of successful people, at afr.com/subscribe. Chanticleer was hosted by me, James Thomson, and James Chessell, and it was produced by Alex Gow and Lap Fan. Our theme is by Alex Gow. The executive producer is Fiona Buffini.
The Australian Financial Review.